program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello, this is The Global View on a Thursday. I'm Andrew Gagan. Good to have you with us again here at Ausbiz. Let's check in on what happened overnight then. Global equity markets mostly higher. US markets returned from the Veterans Day holiday with investors buoyed by the prospect of an end to the US government shutdown. The Dow hit a record high, while the Nasdaq fell as investors rotated out of tech stocks into the cyclicals. Amazon and Tesla were among the Mag 7 stocks weighing on the broader index there, while Palantir also fell heavily. AMD shares surged after the chip designer unveiled a $100 billion data center revenue target. And the Dow was boosted by a gain in Goldman Sachs and United Health Group. The oil companies came under selling pressure, tracking crude prices lower on oversupply concerns, while Chevron said that it plans to grow free cash flow by more than 10% annually through to 2030 and increase oil and gas production while further reducing costs and capex. And EV maker Polestar's stock plummeted as it reported a third quarter net loss of $365 million, while saying it would conduct a reverse stock split, reducing the number of existing shares while increasing their value in an attempt to retain its Nasdaq listing. Well, the US House of Representatives will try to end the longest government shutdown in history when members vote on a stopgap funding package to restart disrupted food assistance, pay hundreds of thousands of federal workers, and revive the air traffic control system. Now, the vote is expected before midday Australian time. If approved, the funding package would have to be signed into law by President Trump, who has said he supports the bill. Meanwhile, FOMC member Raphael Bostic has announced he'll retire at the end of his current term in February, saying inflation remains the greatest risk to the economy and he favours keeping rates steady until it's clear the central bank is on track to reach its 2% inflation goal. US Treasuries have rallied, driving yields lower as concerns over the labour market weakness deepened after a private survey signalled job softness, boosting expectations of a Fed rate cut next month. The US two-year Treasury yield around 3.55%, the 10-year fell to 4.05%. And the US dollar index down slightly on the day, the Aussie trading at 65.4 US cents. Oil prices have tumbled following an OPEC report which forecast that global oil supply will match demand next year. Brent crude futures fell as much as 4% to around $62 a barrel. Copper was up, iron ore rising more than 1% to 103 US a tonne, and gold surged as those treasury yields slipped ahead of the vote to reopen the US government. Spot gold was up 1.5%, currently sitting at around just under 4,200 US dollars an ounce. And Bitcoin has fallen below 102,000 US dollars. All right, so let's get across what we're seeing on markets. Ira Epstein joining us again from Linn Associates. Ira, welcome back. Now, what do you make of the likelihood that this is going to pass through the lower house in terms of that funding bill, and the end of the shutdown is in reach?
All right, the shutdown should be done tonight. In fact, should be a fait accompli. Yesterday was the day that the Democrats tried to attach some health care measures to it. They failed miserably. So today there should be the 60, well, we're in the House of Representatives, so it's going to take the majority vote, but they will get the majority vote there. So I think you'll wake up, the Americans will. They'll wake up in the morning, the bill will be signed. The president's having a glory dinner tonight where he's got the head of American banks from Goldman Sachs, Jamie Dimon is there from Chase, the head of the Nasdaq is there, BlackRock is there. They've got a lot of people there. So this is going to be an enjoyable dinner. Wouldn't surprise me if he signs in front of everybody that the government is reopened. So that part is all done. So now the question is rotation in the stock market. You're seeing that. The financials, and you've got to be selective on the word financials. Insurance companies haven't done well. Banks are doing very well. You're not seeing the Nvidia's run. any longer. Palantir not running anymore. You want to really see something, take a look at a chart of Oracle, how high it went and how it gave it all back in no time at all. Did anything really happen? I don't think so, but it's amazing when you look at the chart action there. The government also said today, the White House specifically, through its press secretary, that we're not going to get the October jobs report and probably any of that data. So they're going to move right into the data that's going to be the November data for us.
Just returning to those moves on the stock market there, Ira. So what do you see as prompting that move out of tech into those cyclicals?
Earnings. I think you get to a PE number that's magical and you wonder, can it keep going at that number? And traders start looking around. I think the other part of it was the president easing up on the financial sector. In other words, he opened up banking in many different ways, got rid of the Biden rules that tightened up capital controls and the like. So I think that whole combination is part of what did it. And, investors, you don't make a profit until you take money off the table. I hope you understand that. So I do see people taking money off the table in the AI sector. It has been the sector. We've seen deal upon deal. I mean, if you don't wake up in the morning and hear there's another deal, be it a Meta going to build its own factory or OpenAI doing a deal with some chip company, it's very surprising. But you tire of that after a while. And then the fear steps in. What if you don't keep getting those deals? Is this PE too high? So that's what I think is, I don't want to use the word spooked. I want to use the word caution. And it's time to peel money off of that area and go to some other areas. AI is by no means over, but it is time to take money off the table.
All right, the year is slipping away quickly. Dare we talk about a prospective Santa Claus rally? Do you think it's going to eventuate?
You're there. What really happened is the market bent the cycles. Normally, as you and I were talking, August, September, October turns out to be a rough, very volatile time in the market, extremely volatile and generally down. We didn't get that. Instead, what happened was at the very end of October, right into the beginning of November, we had that break, if you'll recall. Suddenly, you and I are here now a week and a half later, and today you're at an all-time high in the Dow Jones. But think of the Dow Jones. Those are the big industrials. That isn't your tech. Your tech stocks were down. Don't think of that as the low cap, the Russell. Those stocks are not making a good looking chart. So it's the rotation going on. And I think, yes, as we get into the very end of the year, we will get the window dressing. I think this has been a year where the retail investor has done much better than the institutional investor. They bought all the dips where the institutions, if you go back and look at the data, they weren't the main buyers of the market. Now they have yet to deploy their money. As they do so, what I think happens is you get that Santa Claus rally.
All right, a lot of action in commodities at the moment. Let's first talk about gold, what you're seeing there. Why do you think it is actually rallying again? Is more of a momentum trade that we're seeing there?
It's the only word I could use. I don't see any reason for gold to be making this rally. When gold hit 4,400 and as it was peaking out and coming down, I was just with you a week ago speaking about it. I said, I think the big money took money off the table. I don't think they're stepping in at 4,200 announcing that these futures doing that right here. In fact, I do like copper. I like silver. I like them both better than I do the gold market right now. And that's because I think with the U.S. reopening, with tariff talk dropping away, with the U.S. and China to a degree not getting as crazy as they were with each other, and I think that's very helpful. I think that adds to how the world feels about trade. In addition, we're now hearing President Trump say he wants to lower tariffs on Switzerland. He wants to lower tariffs on different countries. Brazil, they were talking how they're going to take off the tariffs on the coffee as they go through there. So it's one country after the other that we're starting to hear this about, and I think that's important. The other part that makes no sense about gold is if you saw today the energy market, look at how much it fell. And that's because, as I've been saying, you can't keep telling me OPEC's going to keep increasing production or give the right to increase it and thinks that's bullish. The problem that drove it up is that they're not hitting their production targets. If OPEC hits its production targets, you have more to go on the downside on the energies.
All right, because they're forecasting that supply-demand equation is going to come into balance next year, essentially.
That's what I think is going to happen.
Yeah, all right. Ira, always great to get across what you're seeing in markets. Thanks so much for joining us.
Thanks for having me.
Righto, let's turn our attention now to what we can see as we get underway in just a few minutes' time. SPY futures indicating will be a positive start, and a lot of focus on a number of earnings results we've got this morning, including Xero and Orica, as well as GrainCorp, and there's quite a number of AGMs to get across as well, so we'll be getting a bit of a drip feed of information from them across the course of the morning. Stay with us. We'll get across that in just a couple of minutes.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.